I'm Grace Joseph, and you're onto the Gracia Memoir session. It was quite interesting to watch Bitcoin make a break for it from a downward channel only to fall right back into trend 2 days after the channel's breach. The false breakout reminded me of what happened weeks ago when the neckline of our head and shoulders pattern failed to act as a strong resistance upon its retest. Bitcoin's fall back into trend meant bearish momentum has returned to the market, which was evident in prices tank from 44k to 39k within 2 days. If you are wondering whether to take a position in anticipation of another breakout, that's out of question. 2 false breakouts in the same month goes to show waiting for a reaction after a breakout before making entries can pay off really well. It helps you avoid any potential hailstorm that may be unleashed. I'm Grace Joseph, and this is the Gracia Memoir session. Bitcoin's monthly chart shows prices forming a long upper shadow with a small real body that could close near its lows. This candle formation translates into rejection of higher prices. The pattern hasn't breached the EMA 50, which gives it a bearish outlook not unless price closes above the EMA in 7 days or less. The candle itself is a shooting star whose bearish implication is more significant than that of a hanging man. It says the bulls were able to push price to the highs of the candle during the month only for price to fall back near the candle's lows. On the other hand, was there a sign that we could have such a formation? Yes, there was. February's candle opened below the midpoint of January's candle, and that was a hint that we may have a replication of the dreadful work started last month. Now, unlike January's candle that closed as a large momentum red candle, that of February has tried and tested the bear strength, revealing that it's powerful. Unlike the monthly candle, a 2-week overview of the market shows that we have a bullish candle after a blend of a piercing pattern. However, this blended candle is formed at a resistance, which makes it a hanging man and not a hammer. But then we still need bearish confirmation on that candle since it rejects lower prices and closed near its highs. This confirmation comes if the current 2 weeks candle closes below the real body of the blended candle. Alternatively, if the new candle closes above the hanging man, then we can expect a price surge to 50k. Now head over to Bitcoin's weekly chart and you will notice there is a tug of war between supply and demand. The small candlesticks at that resistance zone state that there is a force of balance between bulls and bears. Would that be a bullish or bearish signal? I'll say it isn't very bullish because the first large green candle at that zone showed how demand overwhelmed supply, meaning that the bulls had an edge over the market. But now that the same large candle is followed by small ones, a breakout in either direction is imminent. The candlesticks themselves are a shooting star and somewhat of a spinning top pattern. The good thing about this spinning top is that its close could be above the previous candle, which reinstates the bullish perspective of the market. It also means if the spinning top candle closes lower than the shooting star, there is a high chance for prices to tank below 39k. The daily chart, on the other hand, shows how the double top formation has been breached by a single candle. That's not really a cause for concern since the 40k zone is a strong support on the weekly and could stall further downside movement. Moreover, we also have a monthly support at 39k, which means Bitcoin needs to maintain the 39k and 40k zone for the bullish momentum, if any, to still be intact. The current retrace is also in line with the Elliott corrective wave B with one wave of lesser degree, and the move to wave C coincides with the 50k level. But if the 40k and 39k price levels give way, the Elliott wave is out of question and we could see a further downside move to 37k and even 31k. The bottom line is, these time frames show we are trading around a resistance zone on the monthly and weekly, but at a support on the dailies. Let's take things up a notch. If you give much consideration to cycles, here's something you may find interesting. The bear market was at the strongest between November and February, hence we could get a relief rally in March. This could be a cycle where the major trend is dominant 3 months in a row before a reversal the following month. It's a case of a bull market amidst a bear market. On that note, the downtrend might continue in April, May, and June with another relief rally in July, since the market often reacts in cycles. Another event that backs this logic is the fact that price traded the first few days of January 2022 on a bearish note. And given that it was the start of the year, which often hints the direction of the market for the entire year, January's unimpressive start could mean a bearish market most of 2022. Based on my perception of the market evident in today's analysis, I'll be ladder buying my favorite alts such as Solana, Gala, and Shiba in wait for BTC at 50k, which could happen in March this year. That will be all for now until next week on another session on Gracia's memoir. I'm Grace Joseph, and you're onto the Gracia memoir session.